This marked her 8th consecutive budget presentation, a testament to her experience and understanding of the Indian economic landscape. The budget arrived amidst a backdrop of global economic uncertainty, making it a crucial instrument for steering India towards its growth ambitions. The Economic Survey 2025, tabled a day prior, provided valuable insights into the nation's economic health, setting the stage for the budget announcements. The budget focused on a delicate balancing act, fostering economic growth while ensuring fiscal prudence. The government aimed to address key concerns such as employment generation and keeping the fiscal deficit in check. This delicate balance was crucial, as India aimed to maintain its growth momentum without jeopardizing its long-term economic stability. The budget represented a roadmap for the year ahead, outlining the government's priorities and strategies for navigating the complex economic realities. The Union Budget 2025 projected a GDP growth rate of 6.3 to 6.8% for the fiscal year 2025 to 2026. This projection, while reflecting optimism, acknowledged the prevailing global economic uncertainties. The International Monetary Fund had earlier projected India's GDP growth to be around 6.1%, indicating a convergence of views on India's growth potential amidst global headwinds. The projected growth rate, if achieved, would reaffirm India's position as one of the fastest-growing major economies in the world. This projected growth comes on the back of an estimated GDP growth of 6.4% in fiscal year 2025, showcasing a degree of consistency in India's economic performance. However, this figure represents a slight slowdown compared to previous years, with the third quarter of 2024 recording a growth rate of 5.4%. Despite these challenges, India's economy has shown resilience, and the government remains committed to achieving higher growth rates in the coming years. The budget also addressed the crucial aspect of inflation. The government aimed to further tame inflation, targeting a rate of 4% by fiscal year 2026. The Union Budget 2025 recognized the significance of various sectors in driving India's economic growth. The agricultural sector, a cornerstone of the Indian economy, continued its strong performance, contributing 16% to the GDP in fiscal year 2025. The budget proposed increased investments in agriculture, focusing on enhancing productivity and promoting sustainable farming practices. This included initiatives like expanding irrigation facilities, providing access to better quality seeds and fertilizers, and promoting technology adoption in the agricultural sector. The industrial sector, another significant contributor to India's GDP, grew by 6.2% in fiscal year 2025. The budget aimed to further stimulate industrial growth by promoting investments, both domestic and foreign. Despite previous corporate tax cuts, private sector investment remained somewhat subdued. The budget sought to address this by easing regulatory hurdles, improving the ease of doing business, and creating a more investor-friendly environment. Focus areas included infrastructure development, skill development, and promoting innovation and research and development. Analyzing key economic indicators provides valuable insights into India's economic performance. Foreign direct investment inflows, a key indicator of investor confidence, witnessed an uptick, reaching $55.6 billion in fiscal year 2025. This signified growing global interest in India as an investment destination, attracted by its vast market potential and improving business environment. The government's efforts to streamline FDI norms and create a more investor-friendly regime seem to be yielding positive results. Shipping cargo movement, a barometer of both domestic and international trade, registered an increase, reflecting the growing economic activity. This surge in cargo movement indicated robust demand for Indian goods and services, both domestically and globally. The government's emphasis on developing port infrastructure and improving logistics efficiency played a crucial role in facilitating this growth in cargo movement. Furthermore, the railway sector witnessed growth in both passenger and freight traffic. This indicated a revival in economic activity, with people traveling more for both work and leisure, and industries witnessing increased demand, leading to higher freight movement. The Union Budget 2025 underscored the government's commitment to liberalizing the economy and promoting economic freedom. Deregulation efforts continued, aiming to reduce bureaucratic hurdles and create a more conducive environment for businesses to thrive. This included simplifying regulations, streamlining approval processes, and promoting self-certification in various sectors. The government's focus on ease of doing business was evident in its efforts to improve India's ranking in the World Bank's Ease of Doing Business Index. The budget emphasized the need for fiscal prudence while ensuring adequate resources for critical sectors like healthcare, education, and infrastructure. The government's approach reflected a balance between stimulating growth through public investment and maintaining fiscal discipline. Recognizing the importance of private sector investment in driving economic growth, the budget introduced measures to attract and incentivize private investment, particularly in infrastructure projects. Addressing bottlenecks faced by investors, such as land acquisition challenges and bureaucratic hurdles, remained key priorities for the government. The global economic landscape continued to be marked by uncertainty and volatility. The ongoing geopolitical tensions, coupled with supply chain disruptions and inflationary pressures, posed significant challenges to India's economic outlook. The Russia-Ukraine conflict had sent shockwaves through the global economy, leading to a surge in energy prices and disrupting global trade. These external shocks had a spillover effect on the Indian economy, impacting inflation, current account deficit, and overall growth prospects. The interconnected nature of the global economy meant that India could not remain insulated from these external headwinds. Despite these challenges, India's strong economic fundamentals, a robust domestic market, and a proactive government provided a sense of optimism. The government's focus on building a resilient economy through structural reforms, infrastructure development, and human capital investment was expected to help navigate these global headwinds. India's increasing integration with the global economy also presented opportunities for trade and investment, which the government was keen on leveraging. While the Indian economy demonstrated resilience and growth potential, certain challenges needed to be addressed to ensure sustainable and inclusive development. Weak consumer demand, particularly in rural areas, remained a concern. Factors such as stagnant rural incomes, unemployment, and rising inflation had dampened consumer sentiment. Revitalizing rural demand through measures such as income support schemes, rural infrastructure development, and promoting rural entrepreneurship was crucial for boosting overall economic growth. Furthermore, private investment, a key driver of economic growth, remained subdued despite various government initiatives. Factors such as policy uncertainties, regulatory hurdles, and lack of adequate infrastructure continued to hinder private investment. Creating a stable and predictable policy environment, streamlining regulatory processes, and addressing infrastructure bottlenecks were crucial for attracting private investment and unleashing its full potential. Ensuring a broad-based and inclusive recovery where all sectors and segments of society benefited was crucial for sustained and equitable growth. Addressing these challenges required a multi-pronged approach involving policy reforms, targeted interventions, and efficient implementation. While macroeconomic indicators painted a picture of resilience and growth, it was important to acknowledge the uneven nature of India's economic recovery and its impact on different sections of society. The pandemic had exacerbated existing inequalities, pushing vulnerable populations further into poverty and hardship. The informal sector, which employed a significant portion of the workforce, was particularly hit hard by the pandemic and the subsequent lockdowns. Stories like that of Prema, a single mother who lost her livelihood as a domestic worker during the pandemic, and Amar, a farmer struggling with mounting debt due to crop failure and low market prices, highlighted the human cost of the economic slowdown. These stories served as a stark reminder that economic growth, while essential, needed to be inclusive and translate into tangible improvements in the lives of ordinary citizens. Despite the challenges, India's economic outlook remained positive. The country's strong fundamentals, a large and growing domestic market, a young and vibrant population, and a government committed to reforms provided a solid foundation for sustained growth. The Union Budget 2025, with its focus on infrastructure development, human capital investment, and creating a conducive environment for businesses, laid out a roadmap for India to achieve its economic aspirations. India was on track to become the world's third-largest economy in the coming years, showcasing its growing global economic stature. Realizing this potential required a continued focus on addressing structural bottlenecks, improving governance, fostering innovation, and promoting inclusive growth.